Yeah,
Look at his face.
yeah. Too up, too down.
Look at his
Ay.
face.
Yeah. Yeah, I wanted the crown and to be celebrated. I rented a tux and I ordered a mink. Stood in the mirror like mama, I made it. Proceeded to brush in the teeth in the sink. Caught me a grill and I'm so melanated. I polished the chain, I ain't gold in the link. And I got me a baby who gave me some babies. I'm raising a lady and building a king. Too cold, you too busy running with another man lane, I guess. Yeah, too bold. I be running on the one way, never change my set like, I don't ever use my signals, yeah. I be in the lane myself, yeah. I don't gotta change my mental, yeah. And I ain't gotta chase my wealth, and I accept my daddy got a kingdom, and everything I ever got is his. If I ever got a problem, I'ma seek him. I never doubt him, been about his biz, oh man, been there. I ain't gotta ride on the wave when the ocean is his. Close with the kid with a
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, y'all? It's your partner Dale and Cliff back in the saddle again for another edition of Real Estate Friday Live, man. Cliff, real fast, man, before we dive into our topics today, man. How was the week, man? Did we get that bag, big dog?
Oh, man, it was a good week. Got the bag. Can't complain. Business doing good.
Good stuff. Same thing likewise with us, man. And we did a little bit of a creative deal, didn't we, big dog? We did a little bit of a creative deal, didn't we, man?
Oh, yeah, man. It's got a seller finance deal on one of the properties, so finally got that locked down.
Yeah, man. That was an interesting property, guys. But again, there's ups and downs in real estate, guys. All you do is you either complain or adjust. If you don't adjust, you're going to complain every single time. So it is what it is, guys. Do us a favor, guys, before we begin, guys. Like, share, and subscribe, guys. And if there's a bell on the platform that you are viewing us on, man, do us a favor and click on that bell for us, guys. So when we come live, you get to kick it with me and Cliff, man, real fast. Cliff, before we dive into the topic, man, give us real fast, man. What you seeing in the market? What's going on with the current market? What's going to be, dog? Talk to us.
And the market is changing. I mean, I'm getting alerts every day that the interest rates are dropping. They're trying to get some more liquidity in the system. I'm still seeing, the market basically go sideways. I was looking at a property today doing an appraisal.
Yeah.
This is roughly a $700,000 property. It was purchased 3 years ago. So I got to see all the market data over the last handful of years.
Yep.
It's going sideways. The value of the property is exactly the same, if not a little under from where it was just a couple of years ago. So we're not seeing a lot of huge changes. And I don't know if we're going to see a big run up.
Yeah.
I'm not sure if there's a lot of demand that's going to just come onto the market like there have been, because in order for that to happen, jobs would have to be increasing, the economy would have to be really flowing. And at this point in time, I just don't see it. So right now it's stagnant, going sideways.
I agree. I'm seeing the exact same thing. Long days on the market, really no matter the price point. And it comes back down to the cost of capital is a little bit too high. This is the reason why I was saying that Jerome Powell is a very politically motivated Federal Reserve chairman. He really kind of wounded the market, because what he says, to be honest with you, kind of dictates the housing market. I would agree. And the banking market, to be honest with you, what he actually says. And these little 0.25% cuts here and there, and him projecting, saying that tariffs is going to drive up inflation potentially. It was trash. That worked early on because it was new administration, new type of policies. Want to see what's going on. First, second time, gotcha. But the third, fourth, fifth time, man, you saying the same thing? Trash. Horse manure. Cliff, you agree, Doc, or you disagree?
Man, you already know how I know about what I think about the Fed. Man, they've been making mistakes for years now. Jerome Powell needs to go. He don't know what he's doing. He doubled and tripled rates on the way up, and then barely cut them on the way down.
Correct.
It don't make any sense.
Trash. He trash. We said it with our chest. Guys. Let's dive into the topics real fast, guys. Today, guys, we're talking about three things, and we're gonna give you our commentary. Number one, is the U.S. turning into a renter nation? Is it a myth or is it reality? Number two, portable mortgages. Explain. That is a strategy that the Trump administration is looking at doing. Number three, buying versus renting your home in today's market. What's the best option in today's market? And number four, with these variables here that we're talking about, what's the investor edge? How can investors take advantage of this type of market, man? Let's dive into this first topic real fast, Cliff, man, if you don't mind, brother. Let's bring in, I call him one of the GOATs. He is one of the GOATs. I gotta say he is, Cliff. I don't agree with some things that he say, but man, when I tell you, when it comes to just sheer volume, when it comes to taking risk, when it comes to doing things in a big way, ain't nobody better than this man to me in the marketplace. No matter how you feel about him, Grant Cardone is one of the GOATs. All right, guys. He believes this here. He believes the U.S. is turning into a renter nation. Is it a myth or reality? Let's see what he has to say. Let's get into it. Let's go.
First getting started, they're looking at single family. Single family is not where the opportunities are. There will be opportunities in single family, but the real opportunity is where you can scale, and the assets value is based on the rents, not the comps, as you know, of the neighborhood.
Right.
So we're going to become a renter nation. The massive opportunity right now, we're going to go from where we were building homes in the 50s and 60s
Wow.
and building out the middle class, we'll become a renter nation. If interest rates stay high, housing can't be bought.
Wow.
Which means rents will move up. People are first getting started.
Cliff, man, real fast. I call him Uncle G, man. You agree or disagree? Well, talk to us.
100% agree. I think prices are getting prices are getting too high, and what that means is that it's salaries can't catch up to it.
Correct.
You combine that with the fact that AI is starting to, if not take jobs, change jobs. So if you are a business owner, you're not necessarily looking to hire if you can incorporate AI. So you may slow down right now to see what the options are.
Mm-hmm.
So while the companies are deciding what direction to go, you're going to rent.
Correct. I can agree. Since the cost of capital is high, I don't see it going back down to 2 or 3%. That's not going to happen, guys. I'm sorry. Get that out your head. It was at that level for too long. And so I think 4 or 5% is going to probably be the good basis point for everybody, to be honest with you. And what he's saying is because people are anticipating a 2 or 3%, which is the wrong mentality. They're anticipating that because they're doing that. What's happening is they're not factored in the cost of capital to go buy a home, and because of this, it's going to go 60% rental, 40% owning. I believe that's coming, guys. That is coming. You see, now don't get it twisted. Purchase prices are coming down because they have to. But if the cost of capital is still 6.25%, and it comes down to $50,000 and the sales price is let's say $700,000, that's not a big down tick at all. And I believe a lot of sellers are delusional right now. They want what they want, and unfortunately, we're in a buyer's market. And you may say, seller, hey, my house is worth X. The buyer's gonna say, I don't give a damn about none of that. I'll pay Y. It's real simple. Am I right, Cliff? Am I wrong? You are an appraiser. Let me know.
It's all about demand. All right. If you have demand out there, then you can ask for what you want. If you got no demand, you on the other side of it. You got to sell for what the people want. So this depends what side you on.
Yep, I agree, guys. So again, Uncle G is right. Grant Cardone's right. And one day, man, I'm gonna interview this man. I'm gonna ask him some pointed questions. It is what it is, man. But guys, that's the first topic we got for today, guys. Now let's go to our second topic real quickly, guys. If you don't mind, guys. We're going from now. We're gonna turn to. Let me get to it real fast. Man, portable mortgages, Cliff. Now this is after President Trump wrote out the idea, and they're actually working on this right now, of 50-year mortgages. Now they're talking about portable mortgages. Liddell, what is a portable mortgage? I'm actually glad you asked. Let's bring in some people that can talk about this real fast, guys, and to dive into what this is and how it may work. I'm gonna get my little commentary as well on what they may end up doing. But guys, they ain't playing. They serious. This is gonna say 50-year. I'm sorry, portable mortgage. Let's get into it. Let's go.
The White House has another unique idea to unlock the stalled housing market after floating a 50-year mortgage over the weekend. The administration is now looking into portable mortgages,
Wow.
which would allow homeowners to transfer their current rate from one house to another. So in theory, this would push homeowners who were locked into a low rate to list their house, opening up more sales. And Katrina, why this feels more palpable to me than a 50-year mortgage is this is trying to at least address the supply side versus a demand side.
I agree with you 1,000%.
Listen to
I
this.
think that the affordability crisis is not going to be solved by one policy alone. But I do love this idea of being able to take your mortgage. Like, can you imagine you have a 2 or 3%
Yes.
mortgage, you haven't been able to move, and now all of a sudden you can take that to another property? It will open up supply, as you mentioned. The 50-year mortgage, I didn't like that idea. I understand that it was just presented as one tool in the toolbox, but ultimately you're paying so much interest. And I understand that the payments are going to be lower per month, but I just don't think that it was the best solution. However, I do commend President Trump and the administration for trying to solve the housing issue. I do think we need to also eliminate red tape. Because so much.
We call it blue tape.
Oh, yeah, blue tape. Oh, I like that. I like that.
It's never red tape. It's always blue tape.
You're right.
Can I ask you a question? Does it give
So
the
Cliff, before they talk about a bunch of nothing, here's my question: is when it comes to this, Cliff, right? Does it make sense for number one? What is your opinion on a portable mortgage? Basically, you have a house that you're looking to sell. You have a 2 or 3% interest rate on that boy. You haven't been able to move because you don't want to sell a 2% mortgage to go to a 6.25% mortgage, but you have the ability to transfer your 2% mortgage over to the new home, probably at a higher loan amount. Does that even make sense?
Yeah, I'm trying to see how that would break down. Let's say I'm buying it from you. You got a mortgage. Let's say it's $500,000. I'm buying it from you, and your current loan's $300,000.
Yeah.
How does that work? Cool. I got the $500K. I got the loan. I'm buying yours.
Yeah.
You're not paying yours off. How does that work? Because I'm sending $500K to the title company. So title's got $500K.
Yeah.
But you're gonna say, I don't need it. I can keep the full $500K, and I'll take my $300K and go to the next property. Let's say you buy a same price, $500,000. You get to keep $300K of it.
Man,
I'm trying to understand functionally how that works. And if for some reason you did figure it out, that means there's going to be a lot of second liens.
Yeah, I don't know how they can do this, man. Of course, the government, if they did it, the government would guarantee the loan, because as you guys know, the more you put down, the higher your rate. The less you put down, the lower your rate. Why is that? It is because the government is backing those lower down payment programs. That's the only reason why banks are able to give you a lower rate. That's it. It's not hard at all. I just don't know how they're going to do this, Cliff. I don't know how you can. If I have a house, Cliff, that has a $300,000 mortgage on there, and it's worth $800,000, and I'm paying 2% interest rate, but I want to go buy another house. Maybe let's say I want to downsize to a house, and I'm buying it for $500,000. I owe $200,000 on my initial house. How they're going to transfer? Are they just transferring the rate? I'm assuming they're going to transfer the rate over. Kind of like an assumption. For someone to assume your loan, they have to go through the same process, right? And it's a qualified to say, can you actually afford this note? If the answer is yes, you just assume that note. That's the closest I can come to a portable mortgage.
Yeah, but that still doesn't. That the problem with that was you're saying that it might work if it was the same price, but what if it's a different price? Then you have to get a second to make up for it. So I'm trying to understand how the fundamentals of how you do a portable mortgage. And the problem with that too is if Trump does what he wants, and let's say he does drop the interest rates and they go down all the way to 3%, that's for 30 years. Most lenders, when they're lending, they're expecting that rate to be sold or held on the books for roughly 5 to 8 years.
Correct.
If you allow it to be portable, now they have to realize if you do a loan at 2-3%, they ain't never getting rid of that. And every time rates drop, everybody does a refinance at a lower rate, and now that resets the market. It causes a lot of problems.
I don't think that the bank is really concerned about not being able to unload the mortgage once originated, because they just put it into a mortgage-backed security, tie that to a retirement account via your 401k IRA, Roth IRA, or 403b, and sell it. That's all they'll do, because it's government backed. That's all they'll do. That's it. That's why the first thing that came to my mind was it smells like the same structure in some form or fashion as an assumed loan. But my question with an assumed loan, though, Cliff, is again, if I owe $200,000 in my current property, but I buy the property $500,000, where's the rest of that arbitrage coming at? Because I got to buy for $500,000. Are you just transferring the interest rate over? Not so much the mortgage. That's probably the safest route.
Yeah, but then so let's take your example. Let's say you only owe $200.
Yeah.
You're buying it $500.
Yeah.
On your next note, the whole note is 2%. Or only 200,000 of it is 2%.
I'm assuming it is from what I'm hearing on Fox Business, it's the whole new loan is 2%. And
for your whole interest rate.
Yes.
So your next loan it matches how that I don't know how the banks are going to allow that.
It incentivizes a seller to put their property back on the market that they currently lives in. That's it. The only way it makes sense is if the government sponsors or insures that type of mortgage. That is it. Because you have VA loans, but those are just assumed loans. They're just assumed.
Yeah,
I don't know how it's gonna work. A lot of questions, man. But it's just, I understand the psyche that's trying to get money off the sidelines, that's locked in properties, but you got to come up with a better idea than a portable damn mortgage. I don't see that's for work.
Yeah, that seems a lot. Title company gonna have a field day. They gonna be like, that's gonna be a whole new form. You gotta fill it out to transfer the loan, and you're talking about a lot more regulation. There would have to be some regulation on how that works, because it doesn't work with rental properties. Can I do that?
Nah.
What's the taxes on that? I don't know how they're gonna do it. I have no clue, guys. But it's an idea. It's an idea. It's an idea. Just say, I don't like it. I don't like it at all. I don't like it. You need to do something a little better to be able to get rates down. Don't play these magical games. We're doing this, man, because then what happens is stuff gets bad. So now I don't like that at all. I heard it, man. I was like, I want to hear Cliff's whole mentality on this, man. So, all right, guys, man, let's go to the next topic real fast, guys. Almost done here, guys. The next one is, man, in today's market, right? In today's market, is it better to rent or buy? In today's market, let's bring in another GOAT, in my opinion. Cliff, you know him very well, big dog. He's the sub-2 king. The sub-2 king, brother. Y'all, me and Cliff, we know sub-2s. We know how to do sub-2s. We really good. I gotta say, this dude may get us on this one, because he has mastered this whole thing, man. So Cliff, let's see what he has to say, man, about what's going on. Here we go. Let's dive into it.
Here's the thing. You've got most of the market going, I can't buy a house because they're too expensive. That's not true. the houses are not too expensive. You just can't qualify for a mortgage at a 6% rate. That's actually the problem. If rates went down to 4% or 3%, could they afford the house? Yes or no? The answer is yes.
Depends. But see, I put myself in that exact same position. I qualify for whatever interest rate the thing is.
Okay.
No money down. I just see such a big discrepancy between what I could rent a house for and the cost of owning.
Oh.
And when I see that,
Yeah, I agree.
think, why on earth would I buy something right now when I could rent it for half the cost?
Okay, here's the reason why. You guys should Google this. This is commonly comes up with my friend Grant Cardone, and other people go, you should rent a house. No, you shouldn't. You should own your house. And the reason being is because 99% of your audience is not as smart as you or as me. They're not as seasoned in business quite yet. The average renter, do you guys know what their net worth is? Like, you take the same.
Yeah, of course, it's $80 to $400, and the average homeowner is like $100,000. But
the average homeowner's net worth is $400,000.
I don't think that's because they bought or rent. I think the type of person to buy a house is going to be the type of person to have a good income, to save money, to have their finances down overall. I don't think it's because they bought a house.
Let me make an argument, and I say I agree with you.
Yeah.
So you want people to have the mindset of a renter, not the mindset of somebody who owns a house.
No, have the mindset of whatever makes the most money for you. And right now, I'm in such a firm belief that right now, renting is a superior option to buying, unless you plan to keep the house for at least 10 years or under certain circumstances where there's an emotional component of owning a house.
Yeah.
You want to raise a family there. You need stability.
Yeah, it's like what Ben Muller
peace
said
of mind.
on your podcast. He's like, this is my personal home. What do I care if it cash flows?
100%.
Same thing for me. If you have a wife, you have kids, it's like you should own the house.
Definitely.
Yeah.
Definitely. But I think if you're in your 20s or 30s and you look at it purely from a financial standpoint.
For example, yes, I agree.
Just a financial standpoint, at today's prices, to me, I think it's a no-brainer to rent if you would be disciplined enough to save the difference.
And you think that because the interest rates are high enough that your payment would far supersede what your monthly payment would be if you got a loan?
It's not just interest rate. It's interest rates and prices. Because if prices came down to a certain point, but interest rates were at 8%, you could make the argument that, okay, it's just how does it compare to any other option out there?
It's also just cost of ownership. And that includes a bunch of other things, tax insurance, stuff like that. But the problem is that, yes, Graham's assumption is that people are as smart as him. The reality of the situation is that most aren't. And so if you tell someone to rent instead of buying so they can save the difference, like, I don't think anyone's going to do that. I have so many friends.
Okay, so this is my argument. This is exactly my argument.
I have so many friends my age.
I want to try this so badly.
I have so many friends my age, and I'm not going to say their names. Jack, I'm saying your name. It's not me. It's a different Jack. He's lived with his parents for a few years, and he could have saved the amount of money that he would have spent on rent if he didn't live with his parents. And he could have a down payment on a house right now, but he hasn't.
Okay,
that's a smart person. He's a smart guy, mechanical engineer.
Graham and I are very different people, and I appreciate the type of people Graham represents. I operate better with pressure on my back. I just do. Meaning, if I have a kid coming, I'm going to work harder. Right? What did Alex Hormozi say? He's said this a dozen times. He's like, if you have more kids, it's statistically shown that because of the pressure of having kids, you are going to earn more money. Yeah. I think you have to alleviate the optionality that you give people of saying, well, save the money and invest the rest. They ain't going to do that.
Look at how that turned out with college student loans. Do you think that put pressure on people to make more money when they're graduating $100,000 of student loan debt? No. I think
I don't disagree with you on that.
I think there could be a situation, and this is my hot take. In 20 years from now, we look back and say we forced down buying a home as the American dream, just like we did with a college education. And man, maybe that wasn't the right choice.
I think you're right, but that would be a completely different list of reasons than what we're assuming right now.
Yes.
It could be because AI robots can create houses way faster and the cost of houses go down. We have no idea what the market's going to look like in 20 years. That's just a wild speculation that you can throw out way in the future. But if we're talking in terms of like where we're at right now, then it makes more sense. I think because it's a forced savings account.
You agree with me is that that is exactly it. I believe it's a forced savings account. It forces people to actually do the thing they said they were going to do.
It's the argument of like credit card versus debit card. You know what I mean? It's like, sure, if you optimize with a credit card, you're probably better off because you're saving 1% to 2%.
Right.
But if you use a debit card, you're going to spend less according to studies because of the psychology and how that gets in the way.
It's not really a forced saving.
So, Cliff, this is a great discussion they're actually having. I actually think it's just really good. What do you think, man? What do you think about this entire thing?
Man, it's the reason why they're having the debate is because it's personal. It's really a personal thing because ultimately, if you think about it from a math perspective, right? What you were looking for returns, right?
Yeah.
The first thing you could look at is are you short term or long term?
Yeah.
What's your age? Those are the two biggest things, right?
Yeah.
If you're married with kids and you like 35, you should probably buy. Because you probably got, depending on how old the kids are, you're gonna be there for 10 years.
Yep.
It's gonna help you put equity away. It's gonna help you do a lot of different things. But if you're 25, no kids, you might just get that cheap rent and put the rest into a stock market.
Right.
Let it ride. So it depends on who you are. Like, if you're 25, get you a cheap apartment rent, save the money, stock it away until your life becomes more stable to where you think long term. Once you're ready to start thinking long term, then you want to shift over into looking to buy.
I agree, guys. I think that getting it done that way is the proper thing to get accomplished. What Cliff just said, it really comes down to strategy. What is your strategy? What do you want to get accomplished? Short term, midterm, and long term. All right, divide into those three different things: short term, midterm, and long term, and make sure that you have milestones in place during that short term, midterm, and long term scenario, to where you could engage and say, okay, right now it may be wise for me to live in an apartment, as Cliff said, and stack your chips. Rates come back down a little bit as well, or you stack your chips, you stack your money a little bit higher to the point to where you actually have a down payment. That'd be great. Prices come down a little bit as well. Now you have more choices. That's why I like buyers markets, because of the fact that I can walk in and dictate the price point. I can say I don't want to buy it for $500,000. I want to give you $450 for it, but I want $500,000. Great, go find it. I have $450 right now. What you want to do? Cash is king. It realistically is. Someone that's bankable is king. So that's what I would realistically do. It depends on your strategy. That is it, man. But that was an interesting discussion, Cliff. I thought it'd be good for us to kind of comment on that one, because I get that they question a lot. Liddell, is it wise to buy or to sell in today's economy? And I say, guys, it really depends on what your strategy is. I don't know what's best for you. Only person that knows that question is you. Now, we can do a needs analysis and see what's the best thing for you now, which is fine, and we're open to do that, right? But at the exact same time, it's what we do. Like, for instance, me and Cliff did a seller finance transaction on one of our properties, right? And we're not making as much money as we want to make on a deal. We're not, from a long-term perspective. But we say, you know what? This is going to be a kind of a short-term fix. Now, what are we doing in the meantime to bridge that gap? Got the plan. So we have a short-term, mid-term, and long-term plan. We have all that already ironed out, and it works for investors and retail. So if you agree, you disagree.
No, I agree. I mean, it's all about the strategy. So you just kind of have to see. You got to look at it individually, see what works for you.
That's it, guys. And it all comes down to, that's why we call this the investor's edge. What is the plan? What's your strategy? Whether you are a retail buyer or the investor to acquire properties. That's me and Cliff always do. We acquire properties below wholesale. We don't buy or retail, do we, Cliff? Do we buy retail, man?
No.
It tells us that's a waste of time. We would like to just buy on wholesale, below wholesale. So again, we always say you make money when you buy, not when you sell, man. Cliff, man, you want to say anything, man, before we end everything at all?
No, that's good.
Guys, before we get off real quickly, guys, it is a blessing to have a licensed appraiser on the screen. Am I right, Cliff? It is a blessing, guys. This guy he appraises a lot of properties on a weekly basis. Am I right, Cliff? Am I wrong?
No, I do a lot.
A lot. So, Cliff, if you could tell everybody, man, real fast, man, if you don't mind, tell them, man, tell them about what you do and how you can have them out.
Just right now, mainly focused on residential, but also getting into commercial and doing consulting as well for new subdivisions, new construction, investment properties. And so just go to hunterappraisal.com. We'll hook you up. We'll be able to discuss the entire project with you, get you a quote, and see if we can help you out.
Yep, guys, 100appraiser.com, guys. Again, to have the counsel of an appraiser, a licensed active appraiser, is second to none. Cliff has advised a lot of people, man, and said, don't do this, do it this way. Saved them hundreds of thousands of dollars. He really has, guys. Now, for me, guys, I always tell you this when it comes to what I kind of do, is we make money when we actually buy, not when you sell. So we are giving away a free ebook, guys. It's called Distressed Property Investing. The strategy is in the name. Distressed Property Investing, guys. How to learn how to locate properties below wholesale in your city, town, county, or state. DM me the word real estate. Scan the QR code or click on the link below in the show notes as well, guys. Also, if you don't want to do anything with real estate, hey, something else you can do in the financial technology arena, guys. Banks are constraining their operations to give an opportunity for people like you and I and Cliff, too, as entrepreneurs, to get a piece of the arbitrage there that they actually make on a monthly basis. Insurance and banking. That's called fintech technology, guys. If you want to know what that's about, it's free. They cost you a dime. DM me the word mentor, scan on the QR code, guys, or click on the link below, guys, in the show notes, guys. Cliff, man, you want to say anything, man, before we get up, big dog?
Nah, same thing. You're only one deal away.
You just one deal away, guys. But guys, happy Thanksgiving to you. Can we do anything? You gonna be in town, Dad? You gonna be out of town?
No, I'm out of town. I'm going to Louisiana.
So, guys, we may have a real estate live, maybe not. I don't know, probably not. I better say no because my wife. You know what I'm saying? I'm saying no. But guys, man, Cliff going to the game tonight, guys. Pray for us. It's been a hard year for the Mavericks, y'all. It's just,
man, can't shoot.
Can't shoot for nothing. How can you be a pro basketball player and you can't shoot a freaking basketball?
Oh man, it's wild to see. When you see, I never seen a game there. We watched the game the other day. We was 2 for 26 on 3. That's tough to watch. Yeah, that's tough to watch. See something like that.
2 for 26. Pray for us, y'all. We dealing with a lot of injuries. We dealt with a dumb GM that we got rid of. We trying to right the ship, man.
Meanwhile, Luka is leading the NBA in scoring.
40 points a game.
Who trades the leading scorer in the NBA?
We do. We do. And then get nothing back.
We got something back. It just don't work.
We didn't get nothing back. This Bama Anthony Davis ain't played. He's played 9 games in a year. In what, a year, Cliff? 9.
It's terrible. We signed a point guard. Who just yesterday we found out was having season-ending surgery. So he made $3.5 million this year. So we signed him knowing he had a knee injury. Signed him. That's our backup point guard. And then about 15 games in, he gonna need surgery. He's out for the season. And now we're gonna pay him $3 million, and that's money off the roster that we could have spent to get another point guard.
I have to say, Nico is now the worst GM in Dallas history. He is now taking over that mantle from Jerry Jones. Congratulations, Nico. You did it, brother. You did it. You replaced Jerry Jones. Now Jerry's coming back. He coming back. Don't get it twisted.
He's an all-time leader. It's hard for him to give it up.
It's Jerry Jones. Anyways, guys. But guys, man, enjoy the game. I'm gonna get in with my wife, man. Watch the movie a little bit, man. Kind of chill a little bit, y'all. We got contracts signed, guys. Hey, and don't get it twisted, Cliff. I'm looking at 4 more apartment complexes.
Oh, okay.
4.
All right.
We'll talk about that, guys. But guys, God bless you guys. See you next week, guys. You know I look better than Cliff. Don't worry about it, guys. You see me looking better
stay
than
on. I got a question for you.
All right, y'all. God bless you guys. See you next time, guys. All right, y'all. Peace. Still working 40+ hours a week and still broke. Inflation's outpacing your wages. Insurance is insane. And your side hustle just isn't cutting it. What if I told you there was a way for you to build income by leveraging and using the exact same technology that banks and big corporations currently use right now, with no inventory and no tech skills needed? We've helped hundreds escape the paycheck to paycheck trap by sharing smarter services like lower cost healthcare, competitive auto and home insurance, better loan products, higher yield bank deposits, and even ways to cut energy costs, all in one place. Take this 30-second quiz to see if you qualify. Click on the link below or click on the link in my bio.
My whole thing is, the one thing I hear a lot of the times when it comes to anybody in real estate is, I don't have the money or the credit or the time or the intellectual property. And I said, okay, no problem. I have the money, have the credit, have the relationships. I'll teach you how to locate a good deal, right? Buy below wholesale.
I love that.
And once I teach you that, right, I'll bring me the deal. I help you underwrite the deal, which is fine. I'll even fund the transaction for you as well. So there's no excuses on the table at all. That's why we call that the cash flow club, period. So what happens is, people always ask me all the time, Dale, can you train me? Well, I don't have the time to do that. But what if I set up a platform for it to where you get on-demand training? Anytime you want to, because the training you may need may be after you get off work, early in the morning, during the day. You just log into your account and get the same training as if I'm sitting there one-on-one. We're talking about our attorneys, our general contractors, our appraisers, as well as me, talking about how to structure your business, how to put together what they call a power team. A power team is very important. How to put a deal together, right, and buy it at the right price point. How to market. That's one technique that people don't understand. That you can actually get a list of properties that from your city for free.
Whoa. So walk me through that. Like, you can physically get buildings or homes or properties available for free?
Yeah, I'll send you guys the bill in the mail. It's real simple. What you can do is you can actually call down to your city and ask for the violations division. What happens is you say, hey, I want to see what homes in our city actually have violations. What are violations? High grass, no paint, vacant. You have boards on there. Those are actually violations that the city, or citation that the city has actually levied against that property. They'll give you that list for free. It may be a little bit of a fee, maybe $100.
Sure.
But it is what it is. Then what you do is you actually you can contact those sellers of those properties one-on-one.
Wow, and that's how you make your money. That's one way. That's one way.
If you'd like to learn how successful real estate investors make money when they acquire real estate and not when they sell it, click on the link below, swipe up, DM me the word to real estate to download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed. I'll let your partner and download the ebook today.